Hello everyone, in this video we'll be giving you an update of the Australian property market as it is today, city by city, the sales volumes, the price trends, what city is cooling down, what city is heating up, maybe some intra-city trends, all based on data. I'm really trying to bring you a data-driven approach to understanding the national Australian market, property market, without sort of my opinion getting in the way. I'll insert my insights, my inferences, but I really want you to see the data and let the data really allow you to improve your education so you can do the most with it. Okay, so if you are a property investor, you have a vested interest in the Australian market, or you're wanting to enter in, you're not quite sure, you don't know enough about the property market, hopefully this next 10 minutes really brings you a long way. And if it does, look, my channel really exists to help you guys get ahead through real estate. Hit the subscribe button, whether it's right now or at the end. I'd be really grateful if you gave it a like, gave it a thumbs up. My name's PK, and I help people build passive income using data without needing to have to fork out $15,000 on buyer's agent fees every single time. Let's go. So this first page, all this is CoreLogic data amongst others. The first page illustrates just how big the Australian property market is. And you can see it for yourself, but the key thing I want to highlight here is the household wealth held in housing. Most of Australians' wealth is held in their houses, whether it's their principal place or investment properties. And that's why I've always been, and I'm a firm believer in that the Australian housing market is too big to fail. Much like Freddie Mae, Fannie Mac, the big banks in the UX, etc., and the GFC. I'm not saying we're in a GFC right now, but it's just too big to fail. The government can't allow it to fail. Go back 20%, go back 30%, because that would destroy the banking system and subsequently the Australian economy. So unless you're an anarchist, you probably subscribe to a similar theory as well. In the last 37 years, property markets only ever fallen 3 years, and the maximum was about 5%. So anyway, you can read this for yourself, but this wealth, 10.7 million dwellings with a total wealth or total value of about 9.4 trillion has increased by about 10 or 20%, literally just in the last year or two. Okay, let's go to the next page now. Australian dwelling values. This is what I was saying. In the last 12 months, it's risen by 22.2%. I know that a lot of you might be high-fiving each other, saying, yes, I made the most of that. Others of you might be thinking, oh, why was I dumb not to invest? Why I should have done something. I'll take you through in a second, city by city, and how it's not too late. Actually, you can also get into it. But the insight here is that the capital cities have, the high end of town, 1 million plus type properties. Those are the ones that have been leading the charge. And that's the media rhetoric, property market booming. Actually, there's a lot of opportunity in the lower end of town, under 500, under 400K, under 600K. But definitely, in the 3 months to November, it's the high end of town that has risen the most. All right, so let's go through the last 3 months. So this is November, October and September. So overall, just in the last 3 months, Australian property prices have risen 4.4%, which is, incredible, because on a normal year, or let's say 3 years ago, the annual rate was about 3% or 4%. So just to do that in a quarter of a year is pretty phenomenal. And you can see here that combined regional centers, apart from capital city, large regional centers like Newcastle, Geelong, Gold Coast, smaller ones, perhaps like Toowoomba, Dubbo, other places like that, they've actually beaten the average, and they've also beaten capital cities. Really important thing to note: if you have a budget less than 300, less than 400, less than 500K, regionals have plenty of opportunity. But let's see, like the biggest price rises in this last 3 or 4 months, regional New South Wales. You can see that apart from Brisbane, regional New South Wales has been the best performer. Brisbane, by a long way has been the best performer. Remember, this is also just averages for Brisbane down here, 7.4% in 3 months. I know that we've bought properties in the sort of northern side of Brisbane that have risen more than 10% in the last 3 months. So all of these are just averages. But once again, I want you to understand that regionals are performing better than capital cities and the Australian average. And this is also illustrated in momentum. The combined rest of state versus combined capitals, this lighter purple line is actually still ticking upwards, and everyone thinks that the property market is cooling down. That's not necessarily the case for regional areas, whereas for combined capital cities, it is cooling down. Now, cooling down, this dark purple, doesn't mean that prices are falling, but they're just growing at a more subdued rate, more sustainable, which in my opinion is a good thing. We can't have the property market grow by 20% every year. That is cause for Armageddon, in 3 or 4 years' time. That's not a good thing for anyone, including property investors. That's just a bubble. We want them to grow by around 5, 6, 7, 8, 9, 10% on average, if not a little bit less. We want to outperform using suburb selection, the average. That's how wealth is made, not through, infinite, indefinite booms. But anyway, that was a bit of a rant. You can see regionals momentum is really strong. In 12 months, if we extrapolate, come out a little bit, you can see that this light purple line is actually really, really strong. The momentum is very strong. The capital city line, the rolling annual change in dwelling values, it's still doing incredibly well. Property market's not necessarily cooling from a 12-month perspective, but regionals are doing much better. And you can see regional Tassie, regional New South Wales, you would have made more money in a percentage perspective than if you had even invested in Sydney or invested in Hobart. Let that sink in. Everyone thinks you need to invest in Sydney, but you could have invested in regional Tassie, regional New South Wales, got positive cash flow properties, used that same, let's say $1 million or $2 million, bought 3 or 4 or 5 properties, got the same amount of growth or more growth plus positive cash flow because the yield would have been better, and you would have diversified your assets versus just buying one really expensive, negatively geared property in Sydney. So that's one takeaway from this. Guys, if you're getting value so far, give it a like, give it a thumbs up, hit the subscribe button. We've got about 5 minutes or so left. I'm going to go through each capital city in a second, but overall, capital cities, the thing I want to really highlight in this slide here is that Brisbane and Adelaide, so Brisbane is like this teal color, this one right here, and Adelaide, which is the orange color. Once again, everyone's saying property market's cooling down, it's due for a crash, it's due for a correction in 2022. The momentum in some of these cities just doesn't show it. Yes, in Sydney and Melbourne, which I've never really been a huge fan of investing in because of negative gearing, very expensive, very highly leveraged, very highly negatively geared with yields around 2-3%. That is trending downwards, right? So it's really not a good time to be buying in Sydney and Melbourne, in my humble opinion. But if you're open to other places, and there's other cities here, but especially Brisbane and Adelaide, I mean, these are just going from strength to strength to strength. I remember at the start of the year when we'd been buying, dozens of properties in Adelaide, people were thinking, why are you buying there? The last 10 years have been so ordinary for Adelaide. It's all down to the data, guys. The next chart, capital cities in terms of the percentile value. So what this is saying is that the dark purple is the lowest 25th percentile of value. So, call it, roughly speaking, under $500,000. The light purple is middle 50th percentile of value. So the middle ring, or the middle level of expensive properties. And the super dark purple is the high. So these are $1 million plus, very expensive properties. So you can see, by and large, let's say Sydney, the middle or the medium type properties are actually growing just as fast almost as the very expensive ones as well. That never used to be the case if you looked at this update that I did 3 months ago. But the thing I want to illustrate is, look, Brisbane across the board is doing almost better than any other capital city. So guys, get your money in Brisbane, especially if you're in Melbourne, if you're in Sydney. Be careful. Don't just buy a house and land package in the sticks. Be careful, but get your money in Brisbane, get your money in Adelaide. Consistently, all three are rising. And what will start happening is that this top end of town, the top blue, dark purple color, that will start mellowing out. That's in the next 6 months. And then this middle one, the middle 50% of properties around 500 to 600k, that will gain further momentum. And then with that ripple effect out from the capital city, the CBD, the further out suburbs, this will start coming in. Right? And that's really what happens. The inner city starts growing first, and then there's a ripple effect. That doesn't mean that the suburbs, far away from the CBD don't grow faster or slower than the CBD suburbs. It's just that they take a little bit more time to catch up, but they do. And those are the ones that are affordable. Those are the ones where you can get positive cash flow properties. Okay, so the last sort of 2 or 3 minutes of this video, guys, if you're still with me, is just this one right here. So in the next video, I'll go through city by city here. Actually, I might do it now real quick, but what I want to show you here is the rolling 28-day growth rate in CoreLogic's daily home value index. So what this is a 28-day rolling average. So every 28 days, today, tomorrow, the next day, the averages just roll forward of average home prices. So it gives us a proxy of momentum in the overall property market. Remember, we can't buy the overall property market. What we can do is buy one suburb, one street, one house. So to some extent, this is useless information, but to another extent, it gives you a really good pulse of what's going on in the market. And you can see here that, the property market, it's into sort of October. It actually started going up again. It sort of had a dip around August, September time. And when I say dip, I don't mean it meant backwards. I'm just saying that the rate of growth just, settled out. It softened out a little bit. But now it is, post October, it really is going backwards. Not in terms of price, once again, just the rate of growth. And I think this is so good. That means it's sustainable. It means that prices aren't going to fall off a cliff. Demand is still very strong, but what we've seen over the last few months is that supply. There's been more things for sale, more properties for sale, a lot of vendors or sellers really putting their property on the market in spring coming into summer. You might have noticed that earlier this year it was really hard to buy a property, almost nothing for sale. Now there's more and more stock for sale, which means that demand is very high, supply just increases a little bit, therefore that rate of growth, that momentum is shallowed out a little bit. That doesn't mean it's going backwards, but it's just shallowed out a little bit. Guys, I think I've run out of time to go city by city, but if you want me to go city by city, just comment below city by city, and then the next video, what I'll do is I'll take us through city by city, and I'll also take us through some listings data, I'll take us through some vendor discounting data, days on market data, and go through RBA reports and a few other things, so you can really go one layer deeper even than this video, city by city, really isolating where you should buy, what are happening with interest rates, where days on market, which remember is one of the most powerful demand side metrics, is showing the most strength, and where supply is coming on the most. So this next video, if you want it, comment below city by city, leave it in the comments below, and then I'll produce another video going through the rest of these slides and really honing in to allow you guys to get the best out of your property investment decision, make the most out of your capital, your savings in the bank, your equity in your home. So many people are literally sitting on a gold mine in terms of equity in their property or savings in the bank, but it's just all, they're idle, not doing anything. So if you're still on the sidelines, this next video will bring you a ton of value. If this one brought you value, hit the subscribe button. Please, please, please give it a thumbs up, a like. That way YouTube sends it to more and more people. And guys, I'll leave links below to my podcast, to the Facebook group with more than 10,000 people where we have these kinds of discussions in more detail. And also I'll leave a link below to my website where you can really up your knowledge as well. Guys, my name's PK. I hope you have a brilliant rest of the day. And I just want to say, like, those of you who are scared to invest in property or take the next step, you can do it. Just back yourself. You can do it. Catch you later. Bye.